Welcome to BWC News, I am Elizabeth. Samsung Electronics, the world's largest chip, smartphone and display maker, is considering cutting DRAM and NAND chip production due to the possibility of recording a huge operating loss in the first quarter of 2023, South Korean media sources said. The $160 billion storage chip industry is experiencing a historic collapse in 2022 because of oversupply, customer order cuts and plummeting chip prices, and even industry giant Samsung Electronics is hardly immune. Intel has just delivered a nearly 7 years' worst earnings report. The U.S. chip giant Q4 revenue of $14 billion, down 32% year-on-year, suffered a quarterly revenue for consecutive decline. At the same time, 2022 annual revenue of only $63.1 billion, down 20% from last year. The report just came out. The U.S. stock market set off a wave of selling. Only 27 Intel evaporated $8 billion, about 54.2 billion yuan. The stock price once plunged nearly 11%, closing day market value shrunk to $116.5 billion, about 790 billion yuan. Specifically, the largest part of Intel's 2022 decline is the client computing business unit, which is Intel's largest source of revenue. In the fourth quarter, the division contributed revenue of $6.63 billion, a sharp decline of 36% year-on-year and below market expectations of $7.68 billion. According to the analysis, the quarter also reached the largest decline since the 1990s. In response, Intel said that the global demand decline occurred mainly in the consumer and trading markets. Customers reduced inventory. At the same time, Intel's forecast for the global PC market in 2023 has become increasingly cautious. At the beginning of the United States with its own leader in the semiconductor industry, not only prompted TSMC to cut off supplies to Huawei, but also the joint Japan and South Korea launched a four-party alliance in an attempt to strangle the Chinese chip industry. Now the rise of China's chips, the United States, which thought it was winning, has been hit by a series of thunderstorms, triggering sharp criticism in the U.S. media. The United States underestimated China, which is making a big mistake. The American Semiconductor Association data show that China alone in 2021 to occupy more than 1/3 of the global share of chip sales. As the world's largest chip market, once China achieves self-sufficiency, it will be a heavy blow to the chip giants led by U.S. companies. However, the United States is bent on going its own way. In the global semiconductor suffered a winter background, not only to increase the chip bill, even the lithography also refused to export to China. The result is that not only accelerated the local development of Chinese chips, the U.S. chip market also paid a heavy price for this. Since the loss of the Chinese market, the global demand for chips has slowed down, and most of the U.S. chip giants have a serious inventory backlog. Previously, AMD, Nvidia's single-quarter revenue have suffered a significant drop beyond expectations. Specifically, the Intel 2022 performance precipitous decline, which is the largest decline in the PC chip sector. Operating profit shrunk 82%, which means that Intel's chip sales have decreased significantly. Not to sell chips to China, it is simply stupid. This is forcing China to rise. Bill Gates had angrily warned when talking about the U.S. restriction on chip exports to China. However, the United States both overestimated its own situation and underestimated China's determination to fight back Jedi. After suffering successive supply cuts and joint bans, China's alternative to imported chip technology rose. Made in China did not let the United States get away with it. Data show that in the first half of 2022, China's chip over 190 billion, equivalent to a daily output of over 1 billion. Recently, the Chinese Academy of Sciences successfully broke through the 3 nanometers photonic chip technology and is expected to start the production line in 2023. This means that the U.S. has failed in its siege of China's high-precision technology. China's chip self-sufficiency rate increased, but also hit the United States a surprise. On the shelves of U.S. companies that mainly export chips, chips originally priced at $200 are now down to $20, and no one is asking for them. Even Qualcomm is panicking. It has declared that it will further cut the price of Snapdragon mid-range chips in 2023. If the breakthrough in the field of chips makes the United States dare not despise China, then the takeoff of high-end manufacturing industry makes the Chinese completely raise their eyebrows. In January this year, China's large aircraft successfully achieved its maiden flight, the landing will harvest 250 billion orders and 27 countries' bilateral airworthiness, once monopolized by overseas brands. Selorui, 100 billion youth enzyme market, also ushered in a new breakthrough in Chinese preparation technology. The United States is bent on achieving restrictions on China, but it is lifting a stone to smash their own feet. Not only the US companies are dissatisfied, even before the pace of the Big Brother, TSMC, the Netherlands ASML and other companies have to find their own way to strengthen cooperation with China. Recently, TSMC announced that 15.9 billion in Nanjing to build a chip factory. The Netherlands ASML will also sign 45.6 billion lithography orders with the Domestic Semiconductor Manufacturing International to support domestic chip production capacity. According to the Wall Street Journal reported on January 31st, the past year memory chip prices have fallen sharply, and is expected to continue the low trend in the first half of 2023, which is undoubtedly worse for the chip companies that have cut staff and production. Industry analysts predict that, in addition to Samsung, memory chip maker SK Hynix fourth quarter losses will also reach 812 billion won. The Wall Street Journal believes that the high degree of commoditization and sensitive to changes in market supply and demand of memory chips is the vein of the semiconductor industry, and chip companies are currently carrying a large amount of inventory. Market demand continues to be weak. A number of chip companies, including Intel, Micron Technology, Western Digital, and others, have said after reporting revenue losses that they will cut capacity, reduce jobs and spending to address the growing oversupply and high costs. The facts prove the siege is unable to stop the rise of China. As China's self-sufficiency in cores continues to expand, this is certainly a new challenge for the world's top technology companies. When faced with the problem of survival, perhaps China's win-win cooperation is the right answer. After all, it's time for China to play a role in an era. It's the end of this video. Thank you for watching. Please subscribe to the channel to support. See you next time.